The best way to deal with it is you get it deployed in another property to get those accelerated depreciation out of it.
What's been the biggest frustration for yourself or clients or partners or investors when it comes to exiting highly appreciated assets and or maybe the 1031 exchange?
Comes to experience. I think maybe this is taking this to a slightly different topic, but we're starting to hear some investors, you get into these 5-year value add deals, and all of a sudden you get this huge chunk of money back. You may not want that money back because now you've got a capital gain you have to deal with. And the best way to deal with it is you get it deployed in another property to get those accelerated depreciation out of it. Some of them say, I didn't want it back. I rather long-term hold and just cash flow. So I've noticed a lot of syndicators out there now looking for what I guess you can call a perpetuity plan, where it's just a long-term hold. And there's multiple ways to shake that, but yeah, investors are either looking for growth or long-term cash flow, and I think we as syndicators need to do good by our investors and see if we can't find some more unique ways to pull off some opportunities for them.
Yeah, absolutely. We call that just creating and preserving wealth through the exit plan, right? And so you're right. Cost sags are a great way to do that. If you sell something and you've got cap gains tax, if you turn around immediately and then reinvest, especially in this year, by the end of this year, it's still 100% bonus depreciation. Next year, 80%. There's ways to offset a large chunk of maybe your cap gains tax. But sometimes you don't have enough, right? Or the deal's so big, or you're not ready to buy that deal yet, right? And you're running out of time. That's where we do come in. We have something called a Deferred Sales Trust, which eliminates the need for the 1031 exchange and allows these investors to defer the tax. And then from there, they can redeploy back into other deals with themselves or with partners, or just sit on the sidelines and be patient. And it kind of just freezes that tax or delays that tax, defers that tax until a time of which they actually start receiving payments from the trust. And it's a great way to build wealth, long-term cash flow, and also growth opportunities. You can go to capitalgainstaxsolutions.com to learn more about that if anyone wants to learn.